I'm Taryn Pizer, the Chairman and CEO of Catasys. We're a behavioral health services company, and I'm glad you can listen to the presentation today. Before we go any further, I want to reference the forward-looking statements, the safe harbor language on page 2, before making any investment decisions. So being a behavioral health, I use the term mental health, the government's chosen word. Behavioral health is the industry's chosen word. This is the same thing, whatever way you want to call it, behavioral, mental, it's a broken system. And we help to address what ails the system, and essentially it's an underserved population with treatment-avoidant patient population that suffers from substance use disorder, depression, anxiety. And what we do is we provide access to care. We provide, which is very sparse throughout the country. There's no scalable, replicable, effective care. We're a data-driven company. We're the only ones that have documented outcomes, third-party validated outcomes. And so we provide access to care. We solve the reimbursement issue. Heretofore, there's been very little reimbursement in the industry, and we have incentivized and motivated health plans to pay 100% of the treatment costs for these 3 behavioral health diseases that comprise 75% of all behavioral health disease. Our patients also, importantly, have chronic diseases, cardiovascular disease, diabetes, pulmonary disease. And it's because of these chronic diseases that they cost the health plan so much money. On average, our patient population costs a health plan roughly $30,000 a year. What we do is we provide, as you look on page 3, the Catasys solution, we use big data analytics along with predictive modeling with a state-of-the-art treatment program to tackle these diseases. What we're focused on is arresting the behavioral health disease because these patients are not getting either any care for their chronic disease or they are not complying with previously prescribed modalities for these chronic diseases. And as a result, with a chronic disease, these patients are costing up to 4 times greater than a normal patient with these behavioral health diseases. So again, we're focused on a treatment-avoidant population. We use big data analytics. We're virtual, scalable, replicable, data-supported, evidence-based practices. We provide access to care, and we provide full reimbursement. The health plan pays 100% of the treatment costs. And why do they pay 100% of the treatment costs? If you look on page 4, because we save them on average of this $30,000 a year cost, we save on average 50% per year. The health plans look at the first 2 years, and as a result, we give them a 3-to-1 return on investment, which is a greater return on investment than they get in their basic business, which helps explain why you see Aetna, Humana, Unitedhealth. These are all of the largest health plans in the country. Centene, HCSC. HCSC is the second largest Blue Cross Blue Shield in the country. It's Blue Cross Blue Shield of Illinois, Texas, Oklahoma, Montana, and New Mexico. We have announced 5 of the largest 8 health plans, and we've said publicly that by year end, we hope to be in another 2 of the national health plans, so that's 7 of the 8 largest health plans that we've been able to contract with, and we're just now launching these plans and scaling our operations, which you'll start seeing with the huge revenue ramp beginning hopefully in the 3rd and 4th quarter and continuing from this point forward. It is unprecedented for anyone to come into the industry and sign 7 or as many national plans as we have. And as you can see on page 4, these are our internal projections of how we view our business. We think the magnitude of those numbers, as you can see, in billings is probably the most accurate number to look at. 19 million this calendar year, growing to 57 million and to 145 million. You can see it's a cash flow business. We are asset light. Of course, it's taken us about $180 million in 13, 14 years to get here. But going forward, we have roughly a 50% pre-tax margin. We have 9 to 10 and 9.5 million of SG&A. our SG&A will only go up about 10 to 20%. But you can see we bring about 50% of these billings numbers down to free cash flow, which is quite significant. As you also see in the presentation, we have a $220 million NOL. These numbers look big and the growth rate is tremendous, but keep in mind, please, that the magnitude of these numbers we think is actually conservative. The timing, reason we don't call it guidance, is the timing of these numbers could be off several months. These are huge blue chip companies. They are slow by and large because they're very big bureaucratic organizations and they're very conservative. And they can miss a launch date by 3 months without a problem. But as time goes on over the next 6 months, we're going to learn quite a bit about the model and should be able to offer more specific guidance. But these numbers that you see on page 4 are a good guide to the magnitude of the revenue that we're talking about and cash flow, and we think it will prove to be conservative. On page 7, you can see an evidence of the treatment avoidant population, and of the 27 million of substance use disorder patients, you could see that only 1 out of 10 seek treatment. And of the 43 million that have anxiety disorder, you could see 1 out of 3 seek treatment. And then depression, of the 15, 16 million, only 2 out of 10 seek treatment. This is obviously, most of the industry focuses on the treatment seeking, and about 200 billion is spent. It's only the tip of the iceberg in terms of the market size. And we're focused on the much bigger opportunity of the treatment avoidant. Incidentally, that number you see of people suffering from substance use disorder, the JAMA of Psychiatry, JAMA being a leading medical journal, their psychiatry publication said that maybe as many as 27 million people have alcoholism alone. And incidentally, alcoholism, we see a lot in the press about the opioid epidemic, which it is an epidemic and it is proven deadly. I point out that there are 3 times as many people that die from alcoholism in a year than opiates and heroin. Moving right along, here's the slide that shows you on page 8 that we focus on arresting the behavioral health, mental health disorder, so the patients can now seek, and comply with treatment for their chronic conditions, their chronic diseases of cardiovascular disease, diabetes, and pulmonary disease. As you can see, the reason these patients rack up $30,000 in cost per year is because they emergency room visits and inpatient stays, and it's the inpatient stay that's the result of the chronic disease, not just someone getting in a car, drinking and driving, getting in an accident, and then admitted into the hospital. So it's important to understand that this is our patient population, our eligible members. So to summarize, what the health plan does is it gives us their medical claims every month. We run them through our big data analytics to identify patients that not only will benefit from our treatment programs, but also that we can impact the cost, because we want to preserve that 50% savings rate and that 3-to-1 return on investment. So the ones that we identify that we can impact the cost, we call those our eligible members. And then picture it as a pond. That is the pond that we're fishing in. We use as a fishing pole our ability to identify and predict who we can impact the cost, but more importantly, the ability to enroll, engage, and modify the behavior so they can get care for these complex chronic diseases is our secret sauce, if you will, our real capability. We are enrolling, engaging, and modifying the behavior of a treatment avoidant population, a very sick population, and this is what is the marvel of the health insurance industry. As we go to page 9, you see more of the numbers that I had previously discussed. One number I want to point out here is you could see that it says our eligible population today comprises 22% of the 1.1 trillion private healthcare costs in the U.S. We are going to see this number expand because our analytics and our predictive modeling have improved to the point where we're actually going to be able to identify and impact the cost of something closer to 35% of that number, or $400 billion. So you can see why we're so important to the health plans and why we're so important to the industry. As we see today, again, looking at what ails the industry, obviously the coexisting behavioral medical conditions don't allow them to actually seek treatment. It's a very passive, the $200 billion that's spent in the country today is very passively, a patient has to come to them. And as you can see, there's no cost on page 10, no cost-effective treatment program. Most of the programs are very short-term in duration. Ours is a 12-week program. You can see there's no data supporting any of their outcomes, hence they get very little reimbursement, and it's very stigmatizing and very time prohibitive. In fact, 75% of all those that are substance dependent and have alcoholism are employed. So probably not a great career enhancer is to say, see you next month, boss, I'm checking into rehab. And of course, very low levels of reimbursement. So moving to the Catasys solution, the OnTrak program, which is an integrated approach combining the physiological, the medical, with the psychosocial, and using the big data analytics and predictive modeling in this outpatient program is, and this is very important, it's important that you're integrating the medical and the psychosocial and that it's outpatient. We have a high touch. There are 3 people involved in the treatment program. There's a medical doctor, there's a psychologist, and then there's our care coach. The doctor and the psychologist are independent contractors. So when we enter a state, they are our Uber drivers, if you will. They're independent contractors. We get paid by the health plan, and we pay them directly. The doctors and the psychologists don't have to worry about Medicare, Medicaid, reimbursement. We pay as they notify us of the visit. The care coach is the quarterback. It's our employee. It's really the only real major cost that goes up with our growth, but the cost of the care coach and our outreach personnel can call 1,500 members a year. The care coach can handle 60 members in the treatment program per year, and the care coach is the quarterback. It's a registered nurse by training, makes sure that the patient is enrolled, make sure the patient gets to the medical visits, prescribed medical visits, make sure the patient gets to the prescribed psychosocial visits, and is in constant contact with the patient, reinforcing the learnings from the medical doctor focused on the chronic disease, as well as what pharmacological solutions there are for the substance dependence, the alcoholism, substance dependence, depression, and anxiety. So it's a high-touch, high-intensity, outpatient, integrative care program, and we retain about 78% in the program for the 52-week period of time, which is quite astonishing in and of itself. And again, the savings come through to the health plan. The health plan sees the savings every month, and we reduce the $30,000 per year by 50%. So looking at on page 13, you can see the process from partnering to the actual throughout the treatment program. And again, we using unique sustained outreach and enrollment tactics, we place members directly into the OnTrak program to register those savings to the plan. The reason, as you can imagine, we need the big data and analytic capability on page 14 is because, again, they're treatment avoidant. So they don't submit claims for care. Most of them, as we saw, whether it be 90%, 80%, or 70%, don't submit a claim. So the health plan has no idea who these patients are. And we had to develop that big data analytics, predictive modeling capability to not only identify the patients, but quantify the problem. We're the ones that quantified the problem for the industry and determined that these patients were costing on average $30,000 a year. So you need the big data analytics, predictive modeling, so we can identify who we can impact the cost. And again, we have many years, we've treated thousands of patients that have come through the OnTrak program, so we know which patients we can impact and which patients we can impact the cost, because what you don't want to do is over-treat the population. If you can't impact the cost, there goes the return on investment. It'll become a negative return on investment for the health plan, which is why one of the many reasons why they won't embark on this themselves. And they much prefer to buy the solution from us. And they get a 3-to-1 return on investment, which is better than they get for any treatment program they have in the health plan. So page 15 highlights, again, the outreach and enrollment capability, the motivational techniques that we use, and we use pretty much a way, kind of like a Trojan horse methodology, to get these patients to get into a treatment program that they're typically treatment avoidant of, which, again, that's the magic of what we do. Page 16 outlines the specifics of the program, the medical visits, the psychosocial, and the care coach, our own employee. On page 17, just note that Humana did what in essence is a controlled study of our program and basically proved out in a controlled study the cost savings. Actually, in this controlled study, we actually had a 60% savings rate versus the 50%. And this study, which was published with the American Society of Addiction Medicine, and you can also find it on Humana's website, this is what really gave us the impetus and catalyzed a lot of the adoption that you saw, was this study back from 2 years ago. As we look at our market, our business model points out that our enrollment rate is 20%. So when we get back to the pond analogy, the pond are the eligible lives. The fishing pole is our ability to identify, enroll, engage, and modify the behavior of this sick patient population. We actually so the fish that we pull out of the pond are enrolled members. We have said publicly a 20% enrollment rate, but we are north of 25% on a consistent basis. If you ask us to identify the market, by year end, we should have contracts again with 7 of the 8 largest health plans in the country. They comprise over 50% of the U.S. population. If we look at our 50% market penetration, basically the identified market size today with the existing products today, we will have other products in the future, points to a $6 billion, roughly, a $6 billion revenue opportunity that we should be able to one day garner. It's a very lofty goal, but we think we're on our right track, and certainly, no pun intended on track, but certainly having contracts in place with over half the country is a good indication that we can get there. Just so one knows, essentially our business model, for every 10,000 enrolled members, we'll do approximately 66 million of billings. So it's a number and again, we have huge pre-tax cash flow margins, and it, again, should be a very large free cash flow company. And as far as the stock is concerned, we should be in excess of 100% compounded annual growth rate. We should obviously have tremendous predictability, visibility, and again, we won't be paying taxes anytime soon. So I think we will trade probably at a very high multiple of these numbers. I believe that so much that I invested over $20 million personally in the company, and I would probably say that very few CEOs that you watch in any of these presentations have invested that much of their personal money besides all my time. As you can see on page 22, we enter into typically 3-year agreements with the health plans, and they basically roll over at the end of 3 years. We have a highly scalable asset-light model, and right now we're in 19 states, and hopefully by next year's end, we will be in all major states in the country. All of our customers have expanded geographically, have expanded again along their products. If they started in commercial, they expanded to Medicare, Medicaid, and vice versa. And now they're expanding across our platform and our products. We started with substance use disorder, and we use the same efficient delivery system of our program to enter into depression and anxiety, which basically quadrupled our market opportunity. And again, over time, we'll venture and announce new products that will further expand our opportunity. Again, page 25 points to how we are going to grow significantly from where we are. To put our growth in perspective, We just announced in our quarterly results that compared to December of last year, where we were outreaching to 6,000 members, right now we are outreaching approximately 20 to 24,000. Hopefully by year end, we will be at 50,000, and hopefully by year end next year, we'll be outreaching to 100,000. If we enroll 25%, so essentially what I'm saying is next year, at some point looking forward, 25,000 members, of which we get approximately $6,700 net. After we get $8,500 approximately gross, we credit the health plan for dropouts depending when they drop out. So we get roughly $6,700 net revenue, and our costs are about 50% of that, or perhaps even a little lower. And we, again, are scaling throughout all of our product areas, as well as the states, as well as their product areas. And this will continue for some period of time, for many, many years, I believe, as we see no real competition on the horizon. And the health plans, some people are concerned that the health plans will do that themselves. Structurally, they're not really capable of doing it. And it would take many years of learning about our treatment program, what costs can be impacted, what costs cannot be. And what we do is we provide a total solution, and obviously expanding into more product areas makes us more valuable. And there's also a legal reason. When they pay us, we go in the medical loss ratio. If they were to do it themselves, it would be administrative expense. They must have 85% of their premiums in medical expense. And so it kind of, if they were to do it themselves, they would lose that tax benefit, if you will. Here you can see in commercial substance use disorder, it takes approximately 12 months to get to that steady enrollment rate of 20% or 25%. We're seeing this compact, particularly as we add depression and anxiety. We just launched HCSC, the second largest Blue Cross Blue Shield with depression, anxiety, and substance use disorder. We soon will be launching the same with Unitedhealth, the largest plan in the country. We're going to see this curve contract, we think, significantly. And you'll see the numbers we presented earlier, which is based on this curve. You'll see those numbers grow significantly as well as the curve contracts to how quickly we get to the steady enrollment rate. And that's on page 27. So right now you can see if we get to, if we're outreaching to 24,000 now and maybe 50,000 by year end and 100,000 by year end next year, you can see that we will be scaling quite significantly. And still, even when we get to the hundreds of millions of revenue and free cash flow, we're still probably less than 5% of our customer needs. So it shows you how and why we think we can even get one day to those that $6 billion number. With that, I'd like to open it up to questions. Thank you for listening to the presentation, and I'm here to answer as many questions as we have time for. Thank you.
Okay, we're now opening up the line for our Q&A session with Catasys, NASDAQ ticker symbol CATS. And with us on the line today, we have Dr. Taryn Pizer, founder, chairman, and CEO. Welcome, Dr. Pizer.
Thank you.
We'll jump right into the questions here. We've actually had from a couple investors, we've had some questions. If you could talk a little bit more about the number of eligible members that you have now across the various health plans, and what is the process to actually turning those into enrollees?
Okay, so the eligible lives are the ones that we identify as those that we can impact the cost on by providing a 50% savings rate on average to the health plan. That's the pond that we fish from. We have not announced formally our eligible lives that we have with all the new launches, et cetera. We will, after we launch Unitedhealth here shortly, I believe in the month of September, we will, on a quarterly basis, update the eligible lives. However, what I did say on the latest call is in December of last year, we had $8.5 million of revenue last year. We were only outreaching in December and the fourth quarter to 6,000 members. Right now, after Labor Day, we'll be outreaching to 24,000 members, so a fourfold increase. I think by year end we could outreach to 50,000, and next year I think could outreach to 100,000. Those are based on contracts that we have in place already. That said, we enroll 20 to 25%. It's been consistently over 25% this year. So if we outreach to 100,000, we can enroll 25,000 of those over the following 6 months to a year. We get paid $6,700 net per member enrolled. So the difference, what I'm drawing a distinction, is between outreach and eligible lives. Eligible lives are the lives that we have under contract that when upon launch, we begin our outreach to. So outreach is the more live number. Eligible lives means those that we will be outreaching shortly to. So there's a little lag. It could be a lag as much as 3 months. If we're in a particular state, the lag is only 45 days. If we enter a new state, the lag could be 90 days. But the difference between outreach and eligible lives is just the lag to outreach.
Very good. Thank you, Dr. Pizer. And our next question, I think you've actually sort of touched on this both in the presentation and even in the last question that we just went over. But can you talk a little bit about some of the major milestones investors can expect through the remainder of calendar 2017?
Well, the next one that I'm looking forward to is the launch of Unitedhealth in all 3 of our disease indications: substance use disorder, depression, and anxiety. And Unitedhealth, of course, is the largest health plan in the country. And I believe we will be outreaching first in their commercial population, then their Medicare population. And we should be outreaching to, I believe, 8 to 10 states initially. After that, we look to announce major expansions still with Aetna. We look to announce a significant expansion with HCSC, the second largest Blue Cross Blue Shield in the country, which again is Blue Cross Blue Shield of Texas, Illinois, Oklahoma, New Mexico, and Montana. We also will announce, hopefully in September, very shortly, we'll announce that Humana is back, pun intended, on track. And I think we'll start first in the commercial population and then add the Eastern region Medicare population before year end, probably October, November. We also believe between now and year end, we will announce 2 major national plans as well. We've announced 5 of the largest 8 health plans in the country thus far. We should announce 2 more, making it by year end. We hope to have announced 7 of the 8 largest health plans in the country, which are responsible for over half the covered lives in the country. So those are the main milestones to expect. And of course, we're always working on other health plans as well. Some of the larger regionals, we expect a lot of activity with the Blue Cross Blue Shield as we have HCSC, the second largest, and we hope to announce the biggest before year end. Another milestone, probably the most important, is that the major ramp in revenues should begin in the 3rd quarter and be very apparent in the 4th quarter, and from that point onward as we launch all these plans.
Very good. Yes, a very important addition there. And for our viewers, that actually takes us to our allotted time for this particular presentation. As you can tell from Dr. Pizer's final comments there's a lot going on for the company, especially in the coming months and quarters. So to stay abreast of those developments, please be sure to sign up for news alerts right here at redchip.com. That way you're one of the first to find out on these new developments as the news comes out. And again, this is Catasys, ticker symbol CATS on the NASDAQ.